All right, and for those on the phone that may not be familiar with our SRM Tech Talks, this is kind of where we discuss the intersection between emerging technologies and traditional finance. We have two guests on today, Dean Nolan from SRM, who's our Managing Director of Commercial Products, and he's actually going to be our host today. I'm going to sit in the background, and then our guest is Gene Nayer, and Gene will do his own introduction. Gene, you're based in New Jersey, right?
Yes, I am.
Okay, and I know you advise fintechs, FIs, I think even governments around payment modernization. So we are really fortunate to have you as a guest. And of course, we're fortunate to have Dean on our team, and I get to work with Dean every day. So it's exciting to have him host this today and lead the conversation. So with that, Dean, I'll turn it over to you. Maybe give it a little bit of background on yourself for those that don't know you, and then Gene, maybe you can give a little bit of background on yourself, and we can kind of get into an open conversation, questions that folks on the phone might have or on the call might have, and we'll get this kicked off. So with that, Dean, turn it over to you.
Hey, thanks, Larry, and appreciating you letting me take the chair today and drive the session. And I hope you are able to enjoy it as a participant instead of being the host. So, well, welcome everybody. Appreciate you all joining us. I'm Dean Nolan, as Larry said, Managing Director of our Commercial Payments practice here at SRM. I have been in payments for, actually, I was looking back my entire life. My first job started as a software engineer at a payroll company, and it's grown to banks and processors, and now most recently at SRM. Really excited today to have Gene Nayer join us. We're going to have a great conversation on payment hubs, which is an area near and dear to my heart. You know, as I said, started as a software engineer, did product sales. So I've seen the business side of this business. I've seen the technology side of it, and payment hubs are really a way, really that next evolution of taking us where we're going. So before we get into any deep dialogue on payment hubs, Gene, how about a quick introduction, and then we'll get going.
Sounds good. And let's start by, first of all, thank you everybody joining us. As I said in my LinkedIn repost of this session, I think the quality of this session is going to be determined by the quality of the questions you pose to us. No pressure. And pretty much like Dean, in fact, one of my ex-bosses characterized me as a serial money movement executive. Since I joined banking, that's all I've done, with maybe a couple of little forays. And I've done it on the buy side. So I worked for banks, and the latest bank I worked for was US Bank, which is a top 5 bank in US. And I worked on the sell side. So I worked for a number of fintechs, one of them being Finastra, which I started in a company called Funtech, and 4 or 5 acquisitions later, it morphed into Finastra. And I worked with smaller fintechs in between, and I ran my own consultancy in between. And I had done fun things like advising a country in Southeast Asia when they were selecting a vendor for real-time payments, another country in Southeast Asia when they were looking at the national bill pay solution, working with a country in the Middle East on how to structure governance around the fintech ecosystem to drive their GDP and digital participation. And now back in the States, focusing on how do we bring payment hubs to the masses of FIs. And as the conversation I had with Dean, it occurred to me at least that payment hubs is my hammer, and so every problem to me looks like a nail. And so whenever you ask, the answer is going to be payment hub.
Well, that's a great lead-in. So, payment hubs have been around for a while, but recently they become a hot conversation again. However, as you talk about it being your hammer, it seems everyone that we talk to has a slightly different view of what they are or what they mean. So what do you think payment hubs mean from your perspective?
Okay, So I think what everybody agrees on is that they bring together and streamline payment processing. Uh, Now, where we see uh, differences is, first of all, where do they live? So, for example, I've seen payment hubs that live in corporates, and Kariba or Axeltree will say, we're payment hubs. Some people will say they live in merchants, and so a merchant payment portal sometimes might be called a payment hub. And in fact, intelligent payment routing, which is a feature of Payment Hub, these days gets most of the play outside of the bank, and it's a fintech solution that figures out for the bank how the transaction needs to be routed. But where I play is on the bank and credit union side. So I love to take everything that comes into the FI and figure out the best way to process it most cost effectively, most rapidly. You pick your superlative. That's what we want to do.
Got it. It's a great explanation of them. So with that in mind, what do you think is driving that renewed interest in payment hubs today, and why are we seeing it spike in conversations?
Sure. And so again, just to date myself, I started in payment hubs maybe around 2005. And even at that time, we already had a couple of kinds of payment hubs. We had orchestration hubs that didn't know about the insides of the payments, but could figure out, oh, this should go to an ACH engine and this should go to the wire engine. And then these engines would continue. Or we also had hubs that knew something really, really well. And so I started by cutting my teeth on a wire payment hub for one of the largest banks in the world. And their idea was, we want to wire up 70 countries for our wire processing. Rather than building up 70 different platforms, let's build one across the world. And at the time, this was probably $100+ million initiative, but also just because of the scale, they could get savings in the order of billions of dollars over a decade or so, which sort of gives you the strength and the weakness of the payment hub. It's a great solution if you have massive scale, but if you didn't have massive scale, if you were a domestic institution and you had one wire system and one ACH system, what's the value? Now, looping back to the question you asked, why today? There are a couple of things that change today. One is that we have a huge amount of diversity in US. So now we're up to at least 5 rails, wire, ACH, 2 real-time payment systems, bill pay, push to cards, right? So we're getting that. Second, we are getting an unprecedented amount of transformation requirements, ISO 20022, all sorts of different digital channels coming in, decision on when you loop your bank branch into the payment hub, right? And then finally, we still, even though the investment is slowing down this year, have this exploding fintech ecosystem that say we can do many of the things that bank does, we can do it better. And so how do you take the value outside of the walls of the bank and make it available? So those 3 things coming together say we need something that's much different from the legacy systems that we have. And at the same time, we now have a real acceptance of cloud. In fact, when I was in West Africa advising the Central Bank of West Africa on where they're putting in their real-time payment system, they're deploying it in AWS cloud. So if it's good enough for the central bank in Africa, it's good enough for us. And the other thing is, it used to be that modularization was a buzzword. And first our modules were about the size of buildings, and then they were the size of rooms, and then they were the size of desks. And I think now we're finally getting down to the true stateless microservices. And what that really means is you can put systems together quickly, cheaply, and at the size that's right for the institution. And so all of these things coming together say, okay, we can take something that used to be only for big banks. So almost like the evolution. Before you had a mainframe and only the largest of the large could run it. And then we had the mini computers and only the mid sizes of the mid size can do it. And now everybody's got the cell phone, everybody. And so that's the same with payment hubs. Everybody can now have a payment hub. It makes sense.
Got it. So as I heard you describe there, some of the efficiencies, some of the service people, are payment hubs like truly like a cost reduction play to reduce technical debt, or is there more to it than that?
Well, about 5 or 7 years ago, that was definitely the case. In fact, when we did business cases, it was always about here's the 5 things that we can turn into one, and we can take on us routing and not send it out to the network and save you some money. Those are really table stakes these days. So what's happening now, and I'm going to quote my friend from ICICI Bank, is that core architecture of the bank must become much more modular for us to deliver changes at speed. So it really is much more about delivering these changes. So when you come to the market and you need to be able to articulate how you're going to be profitable if you're a bank, or how you're going to serve your members better if you're a credit union, it all comes down to that. And it is, how do I integrate the newest fintech? The new rails, the instant payment rails, the fact that they're new means that we're going to see a ton of changes over the next 4 or 5 years. How are you going to respond to that? And again, I'm going to give you an anecdote from my days at US Bank, where we had a vendor and we had to get rid of that vendor because they were always behind the curve on regulatory changes. And if you are an advanced bank or an advanced credit union, what you want to be is you want to be not just an adapter. You want to be participating in pilots. You want to be trying things out. And that was just not available with that vendor. So what we find is that people who go to payment hubs, they want, first of all, get rid of the old vendor lock-in and upgrade the vendor experience that they have, and then work with the vendor who is agile and stable and mature, but also who knows how to co-create. So even though Payment Hub is an answer to everything, well, it's not really. And so there'll be things that need to be added around it, things that it needs to interface with. Each bank, even though the business that everybody is in is the same, the way we go about getting our business done is different. And so getting that secret sauce incorporated in how the payment hub is deployed, knowing how to reflect that uniqueness without compromising the integrity of the out-of-the-box solution, those are sort of the key things, I think.
Got it. Well, that makes so as you talk about payment hubs, I know when I go out and look in the market, it seems like there's a lot of people who are offering them. And, you just described with the hammer approach there. Does everybody have the same hammer? Are they all offering the same solution?
Well, there is a lot of claims that everybody is offering the same solution, which is why we recommend that everybody look under the hood. So, so what are the sorts of things that you want to look under the hood for? There are a couple of things. One is even before you get down to the product, take a look at the company. So what we find, if the company has a portfolio of 11,000 things, then Payment Hubs is just one of the things that they have, and it isn't getting the focus that you might get from a more pure play specialist. The second thing that we find is that everybody's on a spectrum. You have legacy vendors who have significant proven solutions around specific rails. And so you might run into the Marketecture Payment Hub where they say, okay, we have Payment Hub, but when you look underneath, it turns out that it's just a bunch of separate rails. There is no economies of scale. There are no efficiencies. And you also run into this giant issue that you change one, it impacts the others. So it's the worst of both worlds. It's separate, fractured, and because it's imperfectly tightly coupled, it's fragile. Then you have some newer ones. In fact, we have some of the very newest ones that came to the market last week and say, yeah, we don't have client one yet, but we will guarantee to you that we are bug-free. And so in my experience of 4 decades here, nobody has ever put a bug-free piece of technology into the market. And that includes NASA sending rockets to the moon, right? They still have to do hot patches as those rockets were spending to the moon. So again, it comes down to where is that balance between buying something that's already legacy or buying something that you're going to have to mature for the next 5-10 years. So finding that sweet spot is fabulous. And then I'll give you a very quick teaser. Some vendors have a very basic payment hub. So all we do is we get the network requirements, we meet the network requirements, everything else is up to you. And by the way, we'll give you a great price. But I think if you go with this very basic solution, you are not in any way moving the needle on what makes your bank different, because the way everybody does real-time payments is the way everybody does real-time payments. It's nothing different. What you want is a vendor who also provides you some kind of value-added services that will allow you to either do your business better, differently, or hopefully both.
Got it. Now that makes sense. And when you were talking about the fractured payment hubs, that really it sounded like what you're describing is somebody who's providing a contract hub, one big contract that covers everything, but the technology under it is all disjointed. And at the end of the day, the bank's still left with that siloed architecture that they're living with today. Is that pretty accurate?
That is exactly on point.
Got it. Well, listen, I know you do some work with one of the payment hubs out there, Finsley. Maybe to give us a little insight as to what it is, makes Finsley's solution unique, given some of the perspectives you've been sharing.
Absolutely. By the way, I'm looking at the meeting chat, and nobody is asking us questions.
I saw that.
I've got a bunch that I'm going to ask if no one else does. And
okay. I know some of you, and I'm going to shame you by name. But anyhow, back to, so I started with Finsley as a board advisor last year, and then I got involved more deeply with them this year. And the thing that attracted me was that, first of all, we started our journey, there about 4 years ago. And it was amazing to me how much we've been able to accomplish in 4 years. So in one sense, this is a true fintech where an enormous amount of value gets created. Now, what do I mean? So to start off with, it's a full-featured payment hub. So wire, ACH, RTP, FedNow, Um, then the next thing that happened, once we put it into production, our customers started telling us, hey, we also noticed that some of the digital banking products aren't doing a great job. Could you give us a side digital banking offering that will let us do it better? And so we delivered a stand-in digital banking for payments that does payments better. We don't replace digital banking, but we do it better. Then the next thing is instant payments. You need stand-in. The company itself is 12 years old, and we've started in FX, and so options, swaptions, and out of that we had a multi-currency ledger, and so we've now adapted that multi-currency ledger for any sort of deposit products. So you can offer a CD on it, you can offer a virtual account on it, you can offer for an FBO account on it, and you can use it as a stand-in core for when your core is not there to take deposits, which is obviously key for when you do real-time payments. And so again, it's what we find is you start with something and then you realize that your ecosystem around you works well most of the time, but needs support. And so we've created solutions that support digital banking. We've created solutions that support core. A number of our banks have said, we see this thing called embedded banking or banking as a service. And so very rapidly, we've rolled out our API suite that is getting great traction. And so you're getting all of it from one vendor. It's all working together. It all comes under single monitoring. Also, because everything runs in AWS, we actually take care of running the system. So we don't provide clerks, we don't sit at screens, but to the extent that resources need to be provisioned, tasks need to be monitored, process needs to be reviewed, all of that is on Finsley. So this really reduces the load that a smaller credit union or a community bank needs to invest in, and allows them to focus on what they do, which is how do we service our customers? How do we service our members? Now, Larry, you asked me, is ISO 20022 table stakes at payment hubs? And honestly, a lot of us came out of the international, and Europe mandated use of ISO 20022 in around 2005. And US is mandating the use of ISO in wires. I mean, Clearinghouse has already gone live. Fed is going to go live shortly. So everybody is, adopting ISO 20022. By the way, just sort of a side note, if anybody says that they're pure ISO 20022 and they handle all rails, you have to ask them, how do you handle US ACH that doesn't fit into ISO 20022 paradigm? How do you support EDI that doesn't fit into the paradigm? So to your question, Dean, it's not enough to say, I am compliant. You got to be able to show some of the battle scars of, yes, I know what it takes to put this in your environment, in your country, in your business line.
Yeah, Gene, that makes a lot of sense. And I was going to add to that too. The question of ISO 20022 message standardization, I always pull back a little bit on that one, because what I find is, well, the messaging framework is standardized. The actual data elements that are being put in that framework haven't been standardized. So you end up, you support ISO 20022, but if you are, if you're not running that through a similar hub or similar engine, you can end up with a spot where you have ISO 20026 different variations of ISO 20022 because the data fields are filled differently and the way you're using it's differently. So standardization on that one is a little, I always highlight that point too.
It's absolutely true. And interestingly enough, one of the products that I was involved in Europe for a very large European bank is we built and sold them for multiple millions of dollars ISO to ISO converter, because apparently German ISO was different from Italian ISO, was different from a Finnish ISO. Hopefully we don't get to this thing in US. But again, I think sort of the key thing is recognizing that nothing is going to be perfect, and working with the vendor who has some, feel for ambiguity, because when you have something new and it's evolving, then you need to be able to strike that balance between, I'm going to get you something quickly. It might not be perfect, but it's going to let you experiment. And then as we both learn together, I am going to be able to quickly iterate. So for example, AI for smart routing, I think might be the next frontier. One of my colleagues in a different payment hub, they're experimenting with using AI for structuring the address, because our normal is 4 by 35, right? Address, name and address. Now in ISO, it's all very structured. And so how do you go into your customer information file and take this unstructured data and structure it? And so they said, well, this is a low risk way for us to start learning about AI. But I think where I actually like to look at AI is not inside the bank, but outside the bank. Because what is the real business of the bank? The real business of the bank is to be sticky, right? It's hard to move of your bill pay. It's hard to move all of your templates. You've already integrated into your bank's managed services. How do you move that out? Now with AI, you give it to your corporate clients, or there is a fintech that comes up and says, I am going to, on a real-time basis, figure out where you're going to get the best rate on your deposits overnight and move them for you. That really removes the stickiness out of the bank, and you can't rely on low-cost deposits anymore. So what do you rely on? And so what you have to rely on is excellent customer service and creative products, which is where I would say you have to have cutting edge technology, not bleeding edge, but pretty cutting edge capabilities, so that you can outshine your competition, because AI is going to remove that stickiness that we relied on. I think that's sort of is the most interesting thing for me.
Yeah, I can definitely see that. Now, hey, Gene, I'm going to go back to another question that popped up here, and it actually ties back to a little bit of your German ISO versus, Iceland, or the Finnish ISO, or whoever's. The question was, how is smart routing setting the vendors for FedNow apart? The reason I tied it back is, as we've seen in the US, we have two faster or instant payment networks, and they both have different versions of ISO. So why don't you take what's your response to that question?
Okay, so again, going maybe to Finsley, we provide smart routing across all the rails. And so you certainly need to be able to do at least the basic level of routing of where are you reachable, right? And so there is a whole set of banks and credit unions that are only reachable through RTP. Now that we have 600 plus new entrants on FedNow, even though there is certainly a Venmo diagram overlap, we now have some who are only on one side. We only have some who are on the other side. Also, some practical learning, particularly if you're new to instant payments, it's going to take you 6 months to a year to get to grips with 24/7 processing. And even some of the largest banks, when they initially started on RTP, we saw them going down a lot. And so being able to route to whoever is accessible and whoever is addressable is important. But then you move down the stack and you get down to, I'd like to make a title payment and I'd like to make it cheaply and quickly. And now in some states, title payments can be made over instant payments. They believe that it is irrevocable, which is the requirement on a title payment. And so I can then drop down to and say which one of the two instant networks I want to use. But then in some states, that's not yet the case. And so at that point, I have to say, okay, wire. And by the way, that means I can't do it on Saturday and Sunday. I got to do it during the business day. So those are some sort of the things that I'd see putting into smart routing. And then, by the way, going back to some of the history that we have is that how involved are you in correspondent banking? Because if you're in correspondent banking, you might be smart routing across your multiple correspondents. My early experience was, and this is going back to the 80s, which tells you how old these ideas are and how we keep coming back to it. Fidelity put in smart routing across its 7 banks, and they said, we're going to measure your service levels and how quickly you clear your wires for us. And based on that, we are going to send more volume to the ones who we deem to be operationally excellent. And so again, flipping back, we in Finsley are measuring how long does it take for us to clear a wire. And we are talking to our banks, like, what is your STP rate? Like the sorts of things that we talk about when we talk about the wire component of our solution. What's the STP rate? How quickly? What's the cost? And so forth. So those are some of the things that differentiate some of the better providers from the run-of-the-mill ones.
Got it. I appreciate that. That was a really great explanation. I'm looking here. It looks like we have another question in the chat from Henry. Says, Gene, I don't know if you can read it. I'll read it for the audience who might not be able to. It says, do you anticipate traditional FIs will look to acquire payment hubs to combat value chain disintermediation? Example, BIN sponsors look to become one-stop shops, meaning fewer vendor relationships for the fintechs. And then the follow-up is, would this be a good thing or a bad thing?
The easy answer to the second question, of course, it depends. And where I will start a little bit in the left field, and I will start with embedded banking. And what we've seen with the latest round of everything that happens around Synapse now going through bankruptcy, what we've seen is many of the banks are saying we shouldn't really go through intermediary because they introduce additional risk. It introduces additional step in our third-party risk management program, on and on and on. And so our clients are much more focused on how do I become a player in direct embedded banking, where I use my API suite, I connect to these fintechs. One of the things that we found is that the economics of creating FBO accounts at scale at legacy cores tend to be cost prohibitive and very slow. So providing a site core that's economical and agile works really well. And so you got all of these elements and you go. So that clearly says, yes, we consolidating our value chain, and that works well. That said, what if you can't do that well? What if you have somebody who is really excellent? And so again, what I think we can constantly see is the pendulum swings back and forth. We go from distributed to centralized. We're going from I'll do everything myself to I'll use intermediaries to give me speed to market. And I think my view, and I'm going to go back to something that I picked up at the SAP conference many, many years ago. They put up their product map, which was color coded, and I was a vendor then. And they said, okay, look at this map. Everything that's in green, that's our thing. Don't go there. We're going to crash you. Everything that's yellow, that's on our 3-year horizon. Go there if you want to, but you're going to be picking up pennies in front of the steamroller, and in 3 years, we're going to crush you. 5 years, that's in red. You have a bit more of a runway, but the best place is all of the white space where we don't even know what's there. We'd prefer you to navigate, to innovate and there. And then, of course, once we figure out what you're doing, we might color code you as well, but you have a much longer runway. So this is what I think is going to happen. And I see a ton of fintechs, and we all have different models. Some of them are very thoughtfully saying, we only deal with banks. We are providers of technology. We want them to do it. Some of them say, we sell to corporates. Some of them say, we want to be in between. Some of them adopt hybrid models. And I think, as they say in England, horses for courses. And it comes down to, can you execute excellently? And I think coming back to Synapse and Mercury, what we've seen is it's not that their technology was bad or the business model was bad. There was a failure to execute. And that's why in some way building technology is easier. Delivering it to somebody who will then run it day in and day out and execute well, that's the hard part.
Yeah. That makes a ton of sense. And I also, as you were talking about Synapse, it also drew in just what's happening on the regulatory front, where that extra risk that you're talking about that was being incurred in that model is now coming under a lot of scrutiny from the regulators. And I think it's going to be interesting to see whether that FBO model and the dumb pipe that was kind of around that is actually what that's going to morph into, because what we've had in the past doesn't seem like it's something that's going to be allowed that much further into the future.
Fair enough. But that's, I think, where we keep coming back to, we have to accept the fact that the future is going to be turbulent. People who keep thinking, if we can just get through this level of change, then we can go back to 363, which is, the classical definition of banking: borrow at 3, lend at 6, be on a golf course by 3 p.m. Well, that's never going to happen anymore, right? It's, so then what we're talking about, you got to partner with somebody who has a track record of, I can turn on the dime and we can work together. And by the way, I have a pretty good track record of not just turning on a dime, but doing it with quality. And when I screw up, because everybody screws up, then we have a way of bringing you back to normal quickly. So I think that's part of the fun of being in our industry is I can't tell you what's going to go down the pike 2 years from now. It's actually really weird where it seems like we keep doing the same things over and over again, but every year something new gets added to the mix.
Yeah, that is so true. Yeah. That's so much I could dig into that one, but without getting too far off astray, I do see a question here from the audience. Larry, you got your hand up?
I do. Let me figure out how to lower it. So don't take this the wrong way. I tend to do a lot of time, I spend a lot of time thinking about the future, and to me, payment hubs and a lot of these payment rails are almost a band-aid on the current system, right? And the current system being independent bank ledgers that are kind of cobbled together with these payment rails so that we can move towards something that feels like instant settlement. And you guys know where I'm going with this, probably from an audience standpoint, is this concept of shared ledgers, right? So we're moving maybe from a double entry accounting to a triple entry accounting, where not only do we settle the instant settlement piece, but we now have programmability, we have immutability, we solve for cross-border, in addition to the instant settlement component. I believe that's the direction it's going. It's probably not going to happen for a decade or something like that. But with the launch of the BIS project that we were talking about a little bit before we started the call, Project Agora, where do you see this going? Is that so far off in the future that financial service execs don't have to worry about it, or is it moving faster than we think? Because what I look at it and I think about, like, when central banks and the central bank of central banks is starting to work on projects that to me feel a lot more like implementation than it does like a trial project. How far off is that? And that's a major overhaul of the financial system, but it does still fall within the two-tier banking system of commercial banks and central banks. And so from that standpoint, it falls in with all the current regulatory legal structures. It's just an overhaul of the technology. And if that happens, there's a lot of intermediaries that could be disrupted, whether it's core providers, networks, payment rail providers, et cetera. So I know that was an awful lot, and I think that's trying to figure a way to formulate that into a question rather than just me spewing off my thoughts on it. But what are your thoughts on how quickly is this evolving, and are payment rails and payment hubs a band-aid, or is it the future, and we don't have to worry about things like a centralized shared ledger?
Um, as you say, there is a lot. So I'm going to start from far away. I'll start with what Keynes said, which is, in the long run, we're all dead. So right now, it feels like it's towards that end of the scale. And I'll tell you why. So I've just been to Bahamas. And as you know, Bahamas has cent dollar, which is their own national cryptocurrency. And I talked to the taxi driver, and it's like, do you guys use cent dollar? And he says, is this the kind of fraud that Sam Bankman-Fried was perpetrating? I said, no, that's different. This is your government. Oh, you mean it's worse than Sam Bankman-Fried? And this is a real conversation. So part of it is on the retail side, at least in that part of the world, they're not ready. Second, I talked to my colleague at Bundesbank, and he is talking about, first of all, they're not talking about replacement. They're talking about coexistence between fiat money and digital money. And he is not anticipating that happening for the next 3 to 5 years. And then finally, when I talk to my colleagues in crypto space, they're all saying, yes, the future will happen, but it will not happen in US. The US regulatory situation is such that this will have to be adapted somewhere else. And that somewhere else is probably Middle East or maybe Europe. And then once it marinates, again, look at how long it took us to adapt ISO 20022. I used it in UK in 2008. Here we are in 25. Only slightly less than 2 decades later, getting it done. And this is a much smaller thing than going to a single shared multi-asset model. And so technology-wise, we can probably get there. Changing business processes is going to be a huge lift. And then figuring out how to bridge from here to there is going to be an even bigger lift, which is kind of would bridge me to sort of the question of how do you put in payment hubs? Because that really is exactly the kind of question that we would ask to say about, okay, you've got a bunch of disparate silos, you got perhaps some broken business processes, but you still got your business to run. How do you go from here to there? I don't know, Dean, if that was the question you were going to ask me next.
No.
Yeah, that was it. By the way, Gene, that was an excellent answer, and I think you said it best with replacement versus coexistence, and I do think it's a long runway, but I do appreciate the answer.
Yeah, and Gene, your answer was great. It covered a lot of things, and as I was listening to the last 10 minutes of this conversation, we started off today talking about payment hubs. We ended up talking about embedded banking, digital money, centralized shared ledgers, and sand dollars. And we were talking about the speed of change, and it made me think. I told you I started my career as a software developer. I was a software developer. 2 parts, one on a payroll system, but the other part was on a deposit and loan system, COBOL, mainframe. It's still being sold today, right? So the pace of change can be really, really slow when it comes to what we're doing. But with all that said, kind of bringing it back today, we were talking about payment hubs. We had some great dialogue around that. I know on the phone, we've got some credit unions, we've got some banks. Do you find that the needs of credit unions and banks are the same when it comes to payment hubs, or are there some differences and maybe some value-added services that are different between the two that they should be thinking about?
Well, if I go back to payment hub is the answer to all of your question, then sort of definitionally there is no difference. But that's a little bit tongue-in-cheek. So I think the way I look at it, if you look at the highest level, there tends to be sort of a major difference. One is for-profit institutions, and they focus on how do we reward shareholders, and then taking care of the members is a little bit of a secondary consideration, regardless of what anybody else says. And the other is not for profit. And so the focus really is how can we be really excellent at serving our members? And so what it comes down to is some of the things are the same, because from an economic perspective, you can do one of two things. You can do same for less. That's the economic model of profit. Or you can do more for same. That's the economic model of I take care of my members. So again, if you take something that allows you to bring your price point down, that's great. Then the other point is that these new and emerging solutions, it's not that if you're a credit union, and we've run into credit unions and community banks who said, listen, I'm a one branch institution. I am in a 400-person town, and what they want and what they love is coming into the branch and chewing the fat. I don't need your payment hub. And it's true. If this is a town square and they pass checks around, they don't need me. On the other hand, if you are a carpenter, a landscaper, a cleaning woman, how do you get paid? And so there is a real blending between person and small businesses. And I am dealing with one person who is banking or is a member of a particular credit union that doesn't offer advanced services. And it is a huge pain for both of us. We have to spend time getting the money to that person. She has to manage her cash flow. She is not a very sophisticated person, so sometimes she gets overdrawn, sometimes checks bounce. So moving to this real-time infrastructure where you don't get overdrawn, where things don't bounce, where you don't have to plan ahead, where you can just see where you are, and then and your personal books are up to date every second of the day is a huge thing. And so then the question is, why don't I just keep my legacy and just add another rail? And some of the banks and credit unions we know do that. They say, hey, I'll just put in FedNow, receive only rail, and we'll just wait until the smoke clears and figure it out. But that's no different from saying, okay, I am now going to replace just one wheel on my car, right? So I'll have 3 Firestones and 1 Goodyear. I'm hoping that my car doesn't shake to death, right? And so, and we can sort of run with that model, but everybody gets it, that if you keep adding pieces to the puzzle, then what you're doing is you're building up technical debt. It becomes more difficult to control. It becomes more expensive. You're spending more and more time on coordination. And then you run into, where did it go wrong? Or you run into, I need to get a single view for my regulator and I can't. And so all of these things just, people shoot themselves in the foot. And as a consultant, we have to go and tell them, shooting yourself in the foot is bad. We highly recommend you don't do it. But frequently they don't listen. It's very frustrating.
That is hilarious and so true. Hey, we have one other question. We have another question here, and then I'll go through, and then we'll have a couple minutes just to wrap up. But the question, Gene, is as payment rails continue to change and get faster, I'm curious, is there an opportunity to drive non-interest income through things like offering instant settlement instead of hoping that by adopting tech like this, this simply helps the institution improve its relative stickiness? Sorry for misreading that question there, folks. It's been a long day, but hopefully, Gene, you got the gist of that.
Yeah. And so I think this is really a hugely important question, because what we're seeing is back to the unbundling of the banking model that we saw earlier. In the 70s or in the 80s, banks have lost the commercial paper market. So we used to have sort of intraday. We used to have short-term loans that we gave to corporates, and that's gone. We went to commercial paper. Now we're seeing the loan market, going away. We have SoFi, that is, what is it, number 5 or 6 bank in that vertical. And so when you look at SoFi, you look at Lending Club, you look at all of those fintechs, you don't need a banking license to lend money. And so what will continue to happen is the businesses where you don't need a banking license are going to keep falling off the banking plate or are going to be challenged more and more. And so when you get down to where does the bank have a really sticky moat or white moat, it is keeping deposits and access to market infrastructures. So for sure, if there are any place where you got to be building, that's the place where banks and credit unions have the natural advantage. And by the way, I've been on a recent conversation with people who advise regulators, and regulators are really wise to any fintech trying to buy a bank as an end run around, I don't have a license and I want to get one quickly. And so those things aren't being allowed to happen. And things like Moonbank that were allowed to happen, they're being walked back. So for sure, there is a giant opportunity to drive non-interest income. And when we talk to corporates, everybody says, we pay for value, right? You keep talking to us about ISO 20022. Well, if you give me a good cash flow solution with factoring and loan optimization and this, that, and the other thing, I'll pay you for it. If not, I'll pay Kariba or I'll pay somebody else, right? Because the value chain is long and it starts at the bank and it goes through the fintechs in the middle and it ends at the other technology providers in the corporate or in your cell phone. And every one of us is innovating, and we're all trying really hard. And whoever does it better wins, and whoever does it better wins for today, because every day we get up and we have to win over and over and over again, and it makes for a tiring but interesting life, don't you think?
It does. It does. And Gene, I've seen a couple more comments come in in response to what you said, and clearly there's been some great phrases you've put here. And I think we pay for value was highlighted as another excellent one. I know we're running into the last 2-3 minutes of the session, and we probably could all sit here and talk to you for another couple hours. But given that we are bumping up against time, is there anything you'd like to leave the group with, just some final thoughts and perspectives, and maybe even give them an idea of, how they should get started picking up a hammer and starting their payment hub journey?
Well, I think a couple of things. One is just start doing it, get engaged, start thinking about it. Second, it's not a technology initiative. What we frequently look at it, or at least in our practice, this tends to be a whole bank initiative. So the way we like to look at it is, how is it affecting your sales? How are you going to bring marketing in? Is it improving your risk profile? And so we speak to every buyer, the IT buyer, the CFO buyer, the operations buyer, the product buyer. And so all of those people need to be convinced and feel the pain. And honestly, it's not that hard. If you're running with your 40-year-old system and you can't close the books and your error rate is too high, and you can't bring on new business because for every $1 of new business you bring, you need to bring in $2 of expense to service that business, right? All of those things, just sort of a fairly easy things to do. And so when we talk to people, it begins with, I want to open this line of business, or I want to go into this new geography. Or I'm growing my business, but I don't want to grow my operations. How do I do these sorts of things? And so once you identify what you want to be doing, then, by the way, nobody does a big bank unless you're really just building a new bank. When we talk about big bang, it really is the question of what's big for you. And in my previous slide, big bang for some cases was one country at a time. Or here it's receive only on one rail for maybe 10 customers. So between those two things, you can find a happy medium. But the key thing is, it's got to be an executive level initiative. It's got to be visible. Your executives have to stay with it from beginning to end. You got to take a benchmark at the beginning, and you got to keep track of what was the value at the end. Did you get what you paid for? And hold your vendor accountable and hold yourself accountable, because sometimes people do one but not the other, and work as a team.
Yeah. Well, Gene, just thank you for that. And I also would add for the folks on the phone, if you're looking to go down the Payments Hub journey and you're looking for someone to help you along that path, we at SRM are really familiar with the journey that Gene's talking about and helping to make sure all the right questions get asked and you get the right answers to them so that you are able to execute this in the simple way that Gene described. So, hey, with that said, I thank you all for your time today. Larry, I'm going to hand it back to you for some last minute cleanup here, and then we'll go ahead and call it a day.
Yeah, no, that was outstanding. And for those that want to reach out to Gene put his email in the chat. It's genenayer@finsley.com. Also, you can reach out to him on LinkedIn. You can also reach out to him on Gmail. Again, genenayer@gmail.com. Dean Nolan, of course, is at dnolan@srm.com. This has been really insightful, phenomenal conversation, great questions from the audience, and I want to thank everyone for their time. And we'll get this recording out probably in the next couple of days, and you can share it with others at your institutions or friends and family or whatever that may be. But again, thank you, Gene, and thank you, Dean.
Thank you, Dean. Thank you, Larry. It's been delightful, and thank you, everybody.
Yeah.
Love talking about payment hubs.
I echo all those statements. Hope everybody has a great evening.
Take care.
Take care.